Good afternoon, everyone. Hope you're having a fantastic day. Let's go ahead and make sure everyone can hear me. If you would please go ahead and type the number 1 in the chat box. Let me know that you can. I would truly appreciate it. Afternoon, Brenda. Hey, Jeff. Afternoon to you as well. Roman. Howdy, Rob. You sound like you're feeling better. Yeah, Alex, much better. Thank you. This weekend was a big boost for me. Hey, Andres, Kevin. Welcome, everyone. 1 here, you 0 for C. Yeah, I don't have the camera on yet, but let's do that now. Let's see if that's working yet. Ta-da! We'll put OK to that. There we go. We got them all going. Look at that. All the resources are rocking and rolling. Perfect. Okay. So as we get started, keep in mind that everything we look at is for education. Nothing's meant to be advice or recommendations. If you find something that you like, anything, make sure it fits your own personal risk profile and risk tolerance. Okay. So let's go through today's agenda. We're going to go through our followers page. We'll talk about today's trades, economic reports, market review. We'll look at future trainings, weekly training topic, and your stocks review. Excuse me. So let's start off with our followers page. So guys, that's just what this is. These are the handles or our logins or info, how to find us on each of the various social platforms. Make sure you go out there and check them out, folks. We are constantly adding new content out there day in and day out. So every given day of the week, there's something going up on social somewhere. So make sure you check those out. All right. Today's trades. What trades did you all do today? Drop them in. Let me see what you did. They could have been something you did Thursday, Friday. Maybe you didn't trade anything yet today. It's only half the day is gone. So maybe you haven't found anything today. Big gap again. So let me know, what trades did you do? Drop those in. I didn't find a whole lot out there today. I did have 2, but nothing crazy for me today. So as you guys are typing yours in, let me do this. Let me put this over here. So I want to start off with last week's setups, right? So let's go take a look at Adobe. We'll go there first, okay? So look at Adobe. We're going to look at the 15th, which was this day right here. All right. So if I bring this in, let's unscrunch this. Okay. So this is the 15th right here. Right. So now I want you to understand something. Actually, let me do this. Let's do it this way. Let's go to the 14th. I want you to see we closed very close to the fib line on the 14th. See 14? We closed very close to the fib line. The moving average is very, very, very close to that same fib line. That means we have a rank of 1. So the end of the day, I'm in position number 2 in the chair. I'm excited, right? I am waiting for the next day to open, and I'm looking for the entry potential. What happens? We open about where we closed. We pulled back up, and we failed. Ding, 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 winner, winner, right? That's exactly what I needed to have happen. The market moved down. We were up 1 contract on Adobe, $292 on 1 contract on Adobe. 10 contracts would be $2,900, right? But not bad for a day's work on Adobe. All right. So really nice setup. We had Netflix was our next one. That was on the 17th. Let's go look at Netflix. 15, 16, 17. There we go. We're in a bullish bias on Netflix, right? We closed here. We opened up right here, and we pulled right back down. So 17th was Tuesday. So let's go back. We can actually go to a 5-minute candle and see this pretty easy. So let's go back to the 17th. And what happened? We gapped up right there in the first 5-minute candle. There's the open. Pulled back and closed right at the fib line. It's screaming at you. Hey, you paying attention now? If we bounce, take the trade. I'm in position number 1 in the chair right now, waiting, position 3 in the chair right now, waiting to rock and roll, right? This is the one where it's time to go. Lean forward, we get a bounce, boom, chagalaga. We take off, and all throughout the day, we hit resistance before the end of the day, so we didn't get out at the close. We got out, somewhere in here, but we got in Netflix when it was at 960 and a half. We got out at 981 and a quarter. We rocked this trade in power option plays last week. And then we did SPY. Let's go look at SPY. Let's go back to a daily chart. Let's try that again. daily. There we go. Okay. Bueno. SPY was also on Thursday, right? So right in here. So once again, if we take this off, bring back, see where the moving average is, see where we close. This is on the 16th. We're at a rank of 1. Position number 2 in the chair. I'm ready. Tomorrow, what's going to happen? We open up with a gap up. We run into the resistance, the 50 percentile, and we fail. This was not a big move for us. But you don't know it's going to be a big move until you take it. There is none of that, right? So we failed off of that level right there. $117 in the bank, 1 contract. Okay, of course, everything we talk is non-funded, right? And our last one was Tesla. Tesla was done on the 16th, so that was on Wednesday. Okay. So that was right in here. We closed in a bearish neutral bias, and we gapped down and stretched back up. On that stretch back up, we failed off that 252.5. We got in Tesla at 251.5, and we got out at 241.5. So a $10 move on Tesla, which netted us $780 on the trade. So overall, really excited about the trades from the last update I did on Pop, which was from the Thursday's close, right? Friday being a holiday, of course, Good Friday. Let's see what you guys have in here for yours. Scalps on IWM and QQQ. Trip said 8% that took too much work and 44% respectively. Okay. So 8 and 44%. Good. Nice. Alex said still large spreads and low open interest, so I haven't done much, but I managed a few good trades. Puts on AMD, NVIDIA, United Healthcare, and SOXX. Also calls on DG. Very good. Days we do power hour are usually good days for me. The other days in between are hit and miss. Oops. Any chance of doing power hour every day? There's probably not a good chance on that one, Alex. Just off the top of my head, there's probably not a good chance for that. But I appreciate the offer or the ask. Roman said MSTR, got it in on Thursday. It paid back. And it paid back. Whoops. Where'd it go? Oh, there we go. Somebody else's comment came in and jumped. It paid back. Fibonacci is the king. You're right. There's no question there. And that is one on my list, Roman, lately is MSTR. Patty said AMD 2 contracts, $145. Very nice. Roman said it was a 20% ROI on MSTR. Cool. Jim said Adobe seems to be in a wedge pattern. Let's go look at Adobe. And it does have this descending triangular wedge happening right now, without a doubt. Good catch there, Jim, on that one. Congrats to all from Patty. Alex said I hit Lily with that high volatility switchback last week for a few glorious minutes. I was at a 40% return, but it never quite hit my target. 75% to the next fib. Spent the rest of the day floating downward. Time erosion on the 0-day option was brutal. Stock went $14 in my favor, but looking at a $500 loss late into the day. Seems like I should have either get in sooner or a more comprehensive target, or you not use 0DTE, 0-day expirations, 0-day options. So Alex, a lot of it just comes down to, yes, 0-day is going to be the most volatile, of course, but buying another week of time wouldn't help if it's going against you. You may have lost a little bit less in premium, but it's still going to go down. You're not going to get away with not having that happen. So bottom line is, and I can't say it enough, is y'all need to, when we get into the micro day trading stuff, Alex, that I think is going to be the trigger for many people to set them apart. And as I said, I'm so confident in that training when we do it. I'm not doing promos for it. Listen, guys, it's going to be a $29 class. We're planning on an hour. It might be 2. I really don't know, but we're just telling everybody 1 to 2 hours is what it's going to be. It's not out yet. There's no link to it yet. My team is still building it. I haven't created the manual for it yet. I know it's going in it. I just haven't created it at this point. Right. And I had 2 of them today, guys. Here's a MasterCard setup. I mean, it was just perfect. Right. So how do I know it's perfect? This is the candle. Right. We were in a bearish neutral bias. We gapped slightly down, stretched up, and failed. But that doesn't help me much for making a trading decision. The 5-minute candle is where that'll happen. So we pulled back down, came back up, and failed. So we closed below, retested, dropped. Now, I didn't get much closed below. I was afraid that with the way the market was looking, we were not going to get another opportunity. I had already missed 2 other positions that I didn't take because of the same type of pattern, where we just barely closed below. So I only did 1 contract on this. It's overall, it's doing okay. We might have been stopped out now on our trail, but we're in this. This was at 513, 514, so maybe 512, I think is where we pulled the trigger, somewhere around there. So right about 512, we're in that position. And if we got out at 508, 509, right? Not horrible. You know, $3, $4 move, I'll take it. Right? And then United Healthcare, UNH. Go back and look at the daily chart on UNH. So UNH, we got a gap down and a stretch back up. Right? So here's the gap down. Here's 21. Right? So here we go. So here's the gap down. Right? We came back and rolled in here. And the ironic thing is, because of this big gap over here to the left, it's hard to see what actually really transcribed here. Watch this. Look at that. What a difference, huh? We pulled down, closed, retested, failed, played around a little bit, and boom, there was the home run right there. There was the killer. It was right there. Got a bounce off of there. All good, right? All good. So not bad. In around 435. Right now it's trading at about 432. But again, overall setup was really sweet. Not a big mover. Also, one contract trades on this one today as well. Yeah, go to Trip Patty Roman. Yeah, everybody, congrats on your positions, on your trades there. Right? Guys, here, I want to share something with you. This is what I was reading off of for Pop. Right? Now, these are our one contract trades. We have nothing open right now. Just FYI, for everybody that's in Pop, I will not be doing it today. We just did it over the weekend because of the Friday holiday. We only have one day in there. I'm just going to move it till tomorrow, so at least we get 2 days that the update is good for, and we'll do it tomorrow instead of today. All right, but I've got nothing open right now. I have done, if you look, we got 136 lines here. The top 3 lines, you can see right here, 1, 2, 1 is hidden, but the top 3 lines are header, right? So that means 133 trades. Of 133 trades, we're up $65,000 on that. So we took, where did it open? Oh, there we go, right in front of me. If we took $65,579 divided by 133, that's $493 per trade on average for our trade so far this year, right? In this one contract account. So not horrible at all. Last week we've had a lot of people join in power option plays. I know I got a little bit of flack, and I'm sorry about that. I made it very clear that when I was teaching the last free classes that we did, don't plan on that last one because there's a good chance we cancel it, and we did. And I got a lot of flack back because people, it was the only one they were able to see and the only one they could get to, and we did have a replay of it up there. But Andrew, do me a favor, please. Can you drop in the link to Power Option Plays? Guys, if you want to learn this system, right? And there was a reason we did this class. If you want to learn this system, here's what's going to happen, right? If you go to this page, which Andrew's going to drop the link in there right now, you'll see it says your investment, $9 for the first month, right? If you're not a current subscriber to Power Option Plays, you have the opportunity of picking this up right now, 1 month for $9. If you're a current subscriber, don't do it because you're just wasting your $9. You're already in, right? It's $9 for this upcoming month. If you want, this goes away today. There's a reason I'm showing you. We had a team meeting this morning. It's on someone's list that today is the day they change prices back. So if you're interested in this at $9, folks, to get in Power Option Plays for 1 full month, $9. If you at the end of the month you say, listen, thanks, I absorbed everything and I'm going to cancel, that's fine. You're not going to hurt my feelings one bit, right? I don't believe that'll be the case. Once you see what we do, you're not going anywhere, right? My suggestion is take advantage of the 1 month at $9 and then switch over to a quarterly if you decide to stay, where it's a lot cheaper for the quarterly than it is by the monthly. Okay, big difference in price. All right, so take advantage of that if you have an interest. All right, let's go back over here. Economic reports. Let's go see what's going on today in economic reports. Earnings, we go, Forex Factory. So went over this in the update for the weekend in the SPX report. Let's change this over. I need a different color. Red. All right. So today we had a 10 a.m. report, which is Richmond Index. It's orange, so it's okay, nothing crazy, right? 9:35 on actually this is tomorrow, not today. 9:35. On Wednesday, we've got FOMC Waller speaking. And it's orange. I'm not too crazy about it. Not worried about it. PMI, both these are PMI services and manufacturing. That's at 9:45. Those are big reports. Those are inflation buster reports right there. Right? You got a 10 a.m. new home sales. I don't expect a whole lot out of new home sales. This is not something that all of a sudden someone's going to go, "Ooh, we just realized an extra million homes sold that we forgot about." I don't see that happening. Okay, not at all. Right? HUD may be messed up. They're not that messed up. Unemployment claims coming up on Thursday. It's a big report, but it's coming in at 8:30. Right? So it's pre-market, as all of these are pre-market. So I'm not worried about it. Existing home sales, that one comes out when the market's open, 10 a.m. But once again, it's just not going to be that big a report. Existing home sales. I think what we're looking at still is we're seeing less of. Right? Now, it depends where you go. I don't know why Perplexity did this, but I just got an email from Perplexity, because we're subscribers to that service, to that AI platform, about housing prices in upstate New York. I have not been looking for houses upstate New York. And how one area up there is now $5,700 is the average rent up there, outpacing income. So there's definite concerns of sustainability from there. But there are places around the country that we're seeing housing grow. It is not the norm, though. Not at all. I just talked to somebody about doing some investing in Florida, and they were like, you might want to hold off on that just a little bit. Not a buy to live home, but buy to, buy a group of homes. There's a couple different properties I'm interested in down there. So economic reports, I don't see anything crazy right now this week. Yeah, Friday again, 10 o'clock report, but it's orange. So I don't see anything that's really going to, rock the boat too much this week. So the heated battle between Trump and Powell, that could be interesting. Powell's not going anywhere. Trump wants him gone. I don't think he has the executive power to do it, although I do believe he's going to test it, whether he does or does not. There have been some backoffs. We don't have any oil or gas reports today. There have been some backoff on energy prices today. And that's because of the Middle East and the U.S. coming to more terms with, what's going on, what's happening with, is the U.S. going to blow up, send military forces there or what? It's definitely a concern from my part, for sure. So we're seeing gas and oil prices come down because of some of the headway that they're making, which is really good. We need to see that gasoline prices down. I don't care about heating oil right now because we're not using any anymore. We're done. Hey, Helen. No worries. Glad you made it. All right, let's go back into the presentation. And let's go look at the market and see what's happening with the S&P 500. So we'll go there. We'll go to a daily chart. All right. So, and once again, the fibs for the win. What are you talking about, Rob? Watch. Be amazed. Be in awe. There's the H, baby. Right after the 618. Remember, keep something in mind. When we talk about a 2 standard deviation move, now this move was phenomenal. We gapped down to here. We went almost one line. So we'll call it 1.5, 2.5, 3.5, more than almost 4 lines, 4 standard deviations. Doesn't mean it can't move that much. It just normally does not. Right? And then we rolled over. We got a quick move down and then that pullback in there. But that H was perfect setup in there. Quick drop that next day and then a recovery and a fail again. But we are not sitting in an area of strength right now at all. I mean, there is serious concerns on the holdup. I watched Kramer this morning badmouth, bash NVIDIA. He's been the biggest in love with company, excuse me, that there is NVIDIA for him. And today he's bad mouthing it and talking about he saw this report over the weekend and he knew he couldn't sell on the weekend and he had to wait until today, but he's telling people sell, right? So good, bad, or indifferent. The market is in, he even named his dog NVIDIA. Yeah, there you go. You're right, Brenda. Jim said, and the rules on the H pattern show it moving possibly where. So when we find that H, I mean, this one was tough, right? Because we got this run up here and this gap down, and that really completed the H. But we came back and tested one more time. And when you fail off of either the 618 or the 50, it could be either one, we look for a two-line move. So from the 618, we go 1, 2 lines, and a little bit. It's usually 2.5 lines is what we get. And the ironic thing is, Ryan and I were teaching together one time, and Ryan had never been, years ago, had never been a big believer in Fibonacci. And I understand why. If you don't understand it, you don't really, oh, you see his lines on the screen, you don't really understand what it is. Ryan would be out with me. I'd be teaching live events. Ryan would come out as a special guest with me, and he would teach some of the event as well. It was great. We had a great time together. We're the best of friends. I love having him with me. I love hanging out with him. And he's in the back of the room, and I'm showing this H pattern and a two-line move, and he goes, you know, Rob, I remember one of my mentors telling me that when a stock makes a decent move down and comes back about half the way plus a little more, and then it fails and it rolls over. I said, oh, you mean to the 618? And Ryan went, oh my God, it's right to the Fibonacci levels. Because I'm pulling up example after example after example. It doesn't mean Ryan's a Fibonacci trader today, but he has a much better understanding today of what it is. Right? Just as Brandon uses RSI, I don't. That doesn't make it a bad indicator. It's just not one that I use. Right? I've got my system. He has his. Ryan has his. Ryan is very much a methodical trader on the way that he analyzes and takes his trades. So we've got a nice rollover there. I mean, for right now, I see nothing. There's nothing blocking us from getting out of 50, 60. Nothing. And that's the next target. If we break that, we're looking at 5,000, and we could come all the way back to the 48.35. But you got that 20% correction. We've hit it already. Now the question is going to be, are we going to maintain a higher low at this point, or are we going to hit a new lower low? Right? Because in reality, let's see. In reality, we do have lower highs here, and we had higher lows here, but today kind of takes us out of the mix. Right? So we had a little bit of a wedge type formation there, and some will try to reference it back to this one here. I mean, you could take this line and draw it right to this, right? Some will try to draw it back to here, but I can't make a clear line anywhere with that. And maybe, but I can't get anything from that, right? Let's do it this way. What if we came off of this top here? See, if I try to catch this here, coming off of that one, I can't, if I put here, I'm nowhere near these tops. So I can come up in here, but miss those. Right? If I come from the bottom, we were good up until today, right? And then it gapped down. Again, I think for me, maybe even off of here. Let's see. That's fine. I like there better, personally. And not because I want it off of this point. I'm looking at it off of this point. This was a lower high, right? So could we come off of the previous one I had in there? Yes. Right? We're just not, it's not clean. It's just not clean. There is no good way of drawing it. It's just not. Okay. Patty, it'll be in the pop area, but remember, we did this on Thursday night, and it's Monday. Friday, we were closed. Weekend, of course, as well. So it'll be in the pop area. I don't even know. I should ask. I didn't even talk to Sean about it. I don't even know if he remembers from last week. We did the class, but I'll bring it up today. But it'll be in the pop members area. There'll probably be a new tab put in for it, Patty. Jim, I think I answered your question on the H pattern, right? Just let me know if I did not. And take those off of there. So 50, 60, and 5,000 the two downsides. On the upside, 51.98, call it 5,200, and then 53.11. Yes on H. Good, Jim. Thank you. All right, we look at VIX, fear. So we get a big move on fear back to the upside. We were just testing back into the green zone just a little bit. And we're right back up today, another 4 3/4. Right? So once again, a very large, big move. Big move to the upside here for VIX today. So And on the S&P, we're down 148 points. It just blows me away that the Fibit on S&P 500 is 350, which means take half of that. It's 170 points a day on average for the last 13 days. The S&P moved intraday, 150 points. Right? I remember. Let's just do it here. Let's do this instead. Yeah, I can't really do it that way. I was going to say, let me go back and look. Watch. Oh, goodness, went too far. Okay. Let's go back to 2000, right? All right, can't do it there. Let me go here. So we're in 2000. Wilder's average true range was about 25 points a day in 2000, right? If we go to 2001, actually, this is 2001. Sorry, it's 01. We're at 25 points. It's about the same from 2000. And the reason I said 2001 is because of the debacle there with Y2K. Right? And then if we look at, let's go back one. We look at 07, we were at 16 points a day. That's a little bit it moved. Into 08, we got to 30 points. Ooh, we're rocking. 09, we're at 19 points. 21, 16, 16, 13, 13, 32, 19, 12. All right, 48. So you see where things change with COVID? And it has been, and even with COVID, it was 48 points a day. And now we're at 170 or whatever I said it was, 150 and 20. Yeah, 170 a day. So we definitely are getting some serious legs on the S&P right now, without a doubt. That. Okay. Bueno. Also, earnings season is now, could keep the market going lower if earnings are not good. Without a doubt. Jim, you are spot on. Barry said, we are now at 5,000. In 2001, we're at 950. The S&P is 5 times as large today. So 135. So these moves make sense. Yeah. And I'm not questioning the math of it, Barry. Just the fact that it moves that much is where I was going with it. If we go back and look here, go back and look to February of 25, right? When the S&P was at its all-time highs and we're doing 67 points a day, not 170, right? So, and you can look, you can see that at much lower levels, 5,000, 6,000, we were at the same-ish, 40, 50, 60 level until we got this move up. Once we got, here's the all-time high. On that day, we were about 60, we'll call it. Now we're almost 3 times that. So yes, in relationship, you could look at it that way, but not normally how you're going to get the movement of it. Here, you can clearly see that this downturn is what's caused that craziness. And traders have just not stepped in and accepted the fact, that we're seeing these bearish patterns. There are a lot of bulls out there still, and there are a lot of people throwing big cash at stocks still, trying to bolster and keep things up. And I'm not saying no, right? That we're not going to go back up. I'm not saying that. What I am saying is there is a lot of evidence out there, and if you do some research and you find the Robert Kiyosaki's of the world, and there's some others, I can't remember her name now, who's got a video out that hit a couple of million views. She's an economist, hit a couple million views that she normally gets like 12 views on her thing of, she found this little nuance in there when the markets are doing this and it's shifting like that. And I watched it about 3 or 4 months ago. But there's a lot of evidence-based rules out there right now that are saying, there's a big opportunity that we're going to come tumbling down right now. What happens with tariffs? That is such a teeter-totter right now. There's nothing, and I mean nothing, that prevents us from collapsing if tariffs kick in the way that, even if they come out to be perfect a year from now, we're going to see the market take a massive hit because of it, right? But here's the thing. If you listen to any of these big investors, they're not selling their stocks. They're buying more, right? So, and I mean intelligently. They're not just saying, well, I bought it at 100, now it's at 80, let me buy more. They're buying it at key levels where it looks like it may be starting to bounce, right? Even if it's early, they're entering the trade on a dollar cost average. Jim, that might be data related on the volume. I don't, excuse me. I don't know. I don't know. I don't usually pay attention to the volume. I'm not sure. I don't know why that's lower here. It is a daily chart, right? Yeah. Dennis said, why are they buying stocks early? So Dennis, watch. If I use the S&P 5, let's go in Netflix. Okay. So good. Netflix, not a video. Okay. So we had this big move down. You know what? Let's go over to moving averages. We had this big move down, and we get this bounce, right? And in this bounce, look left, other key levels back there. Traders are sitting there going, you know, this may be an opportunity to add to my position. Why? Because I bought some on Netflix. You know, I bought it back here. I bought it here. I'm using an example. I'm not saying I did this. I bought it here. I bought it here. I bought it here. And now I'm going to buy it here, right? They're adding to their position. They're not, if you're a stagnant investor, meaning you just take and buy 100 shares one day and you're done, right? You're relying on your decision making to be that day and that day only, right? Everything had to be perfect for you to be right in that trade. If you dollar cost average and you bought it over 3 or 4 or 5 times, I normally attempt, ideally, depending on the position, not all, but let's say between 3 and 5 purchases is what I plan to make when I enter a trade. I don't usually buy it all at one time. If I'm right and it bounced and I caught the key level, if it moves up, pulls back, and bounces again, I'll add to the position. Moves up, pulls back, bounces, I'll add to the position. It's a dollar cost averaging instead of throwing it all in and hoping you bought it at the right place. And I'm not saying you can't do it that way. It's just not the way that I choose to do it, right? Some of the folks that I associate with are totally against it. Once again, it doesn't mean they're right. It doesn't mean I'm right. You're right in whatever you think is best for your portfolio. So Dennis, they're just looking at trying to get into that early buy and dollar cost averaging their way down on the position. All right, does that make sense, Dennis? In other words, it's just what they do, and that's how they do it. Not that they market, not that they market it going up. Not that the market's going up, right? They're looking at a bounce. It's not just I'm buying it at 100. Right? It has to have bounced off of a key level, not normally just buying it because it's a lower price. Now, psychological levels like 100 may be something to buy. You know, NVIDIA, I've talked about this one before. NVIDIA getting to $100 was a key level. Were there some buyers in there? There were last week on Wednesday. There were. We got down and we bounced. Thursday, we gave it back, and today we just continue to push down, which is where the news over the weekend, you know, NVIDIA's down another $5.50 right now. The news over the weekend has just not been strong for them. So they're suffering. They're suffering without a doubt. All right. Okay. Let's go. All right. So guys, upcoming trainings. So we got Inner Circle coming up this week. Well, check-in is tonight. And then we've got the quarterly, which is the 25th and 26th. Half-day trainings at 10 o'clock to 2 p.m. Friday and Saturday. Mastermind group is tomorrow night. That is me teaching. Monster Market Movers on the 30th. That's next week. All right. And then Power Option Plays core training is coming up. The next one is on May 1st. We had it on the 29th, guys. We didn't realize it was a Tuesday that overlapped with with Mastermind group. So we moved it. It's now on the 1st. We've got it on this training here. Power Hour Trading Coaches playbook are on the regular schedule, as is Power Option Plays, Covered Call Explorer, E-mini, except that Pop is going to be tomorrow instead of today. And then Trading Blueprints coming up there, guys, right? And that is Tony. So make sure you save your seat for that. He's got 4 dates there, 8 p.m.s and 12 p.m.s. Andrew just dropped a link in for that. Trip said, I'm looking forward to Friday. What you going to teach? I've got a whole list of things, Trip, that I want to try to incorporate in to Friday. So I'm excited for that. And Alex said the last Pop Core training was awesome. I'm looking forward to the next ones. Now, Alex, I know Alex has been full bore on Pop for the last couple of weeks, maybe months now, 2 months maybe. And he's been working it hard. I mean, really hard. I get emails from him. I get constant. He's in there asking questions. He's here talking about the trades he's doing and so forth. So did you get a couple of nuggets of gold out of that, Alex, on Thursday of last week? And we just did it, folks. We did it the last trading day. We're Easter, Good Friday Eve, right? Holy Thursday, and we're teaching. Alex said, heck yes. Okay, good. I'm glad to hear that. So we've got 2 more of them planned right now. The next one is coming up here on the first. All right, weekly trading topic: how to trade such a volatile market. So this was a controversial one. Do we really need to talk about this? Yeah, there you go, Alex. Whenever I show up, I am there to learn. I know, without a doubt, I know that. So how to trade such a volatile market, and guys, we are without a doubt in pure volatility. If we look back to VIX, right? Here's the S&P, right? If we look back at the VIX, that's volatility, fear, right? Now we hit a high on this day of 60. We'll call it 60. It's close enough. 60.13. We'll call it 60, right? That's the highest we saw. I got to go back here, 1 day stretch on August 5th of 04 to get up there. If I keep going, we ain't been at 60 since 2019. That's how concerning this is, or should be, right? Those that understand, right, and use VIX and trade off and understand how the volatility works, that spike, and they don't normally last long, but man, is this a painful move from 18 to 60? Yeah, means your stocks, your longs are getting crushed when that's happening. S&P is coming crashing down. When it comes to what do you do to trade this type of volatility, I will give you what I think to me is probably the most sacred thing you could possibly do. All right? And that is, let me grab a Word doc and write it out. Or what is that? Let's do it here. There we go. Trade in the direction of the S&P 500 only. Only trade the direction of the S&P 500. Now you can take that as, well, is that intraday trading or is that overnight trading? Yes. If you're going to hold overnight, then only take it in the direction of the S&P 500's overall pattern, which right now is bearish. We are in a bearish bias right now. There is no reason to look to take a bullish trade. We take them in power option plays. Why? Because the rule in Pop says we take every single setup regardless. I may look at it and go, man, I wouldn't have taken that in real life, but it doesn't matter. The pattern presented itself, we have to take it. Because there's no way you can expect to get similar results as me if I am doing it on my knowledge and my gut and making decisions that don't have rules-based backing to them. So everything we do in Pop is rules-based, decision-making. Is here's the pattern. It happened. We take the trade. But it was bullish and the market's going down. We're going to take it anyway. Do you want to do that not as you're learning Pop, but as you're doing real money in your trades? Probably not. You probably want to trade just in the direction of the S&P 500. right? And the reason for it is, some know this, some don't. I've used this statistic before. 70 to 80% of all stocks move in the direction of the S&P 500. So most stocks move with the S&P, just trade with the S&P. If you went back and you looked at your previous trades and you found where you took bullish trades on bearish days or bearish trades on bullish days, if you have taken those types of setups in the past, you may find that eliminating those from your trading could jump you up another 10 or 15, 20+% in your win to loss ratio just by shifting away from that pattern. So if I'm looking at it as an overall picture, then I'm saying I want to trade the overall direction because I'm going to hold overnight. I'm looking at the big picture of the S&P, which is only bearish. If I am looking at this from the perspective of what about if I'm intraday trading, can I take the bullish pattern? So as an example, we got this gap down. We hit the 20% correction level, which is what this is drawn to, 20% correction. Okay, that's what that line is. We hit that level. Right, we hit that 20% correction, and then we bounce. Did I have off of this 20% correction line or off of this fib line, did I have a clear path? Well, I had the 100-point level in there. I ran up and hit my fib line. But now if I'm looking at this and I'm trying to compare this to another stock, this is the 7th, right? So let's do this. Okay, so this day. So now on this day, can I find bullish trades to take? I don't know. Let's go look. Let's look for the orange bar. Did I get the bullish bounce in here this day? I got a bounce. Did I get an entry? I don't know. I don't know, but I got the bounce. Did I hit resistance? Yep, I'm out well before that. All right, let's look at AMD. It didn't really bounce off a support level anywhere, so maybe not. Well, this one gapped right down and ran. So on Amazon, when we gap down to that 159 level, oh, actually that wasn't, no, we were scrunched up, I guess. No, I thought it came down to that level. Sorry, it did not. All right, so no, Amazon was a no. Broadcom did. Broadcom opened here, ran down, and bounced. So it went off, it came down to 140 and bounced up to 154. So if the S&P 500 is moving up intraday, and I see a stock that's bouncing, even though the overall pattern is bearish, can I take the trade? If there is a clear and concise entry, clear, there is nothing in my way. It's a clear path to resistance. I have nothing here. No moving averages, no recent swing highs and lows, no fib lines, no 100-point levels, nothing in my way. Nothing. Okay? I don't have that. Yes, I could take that bullish entry. But, and I don't know if I definitely can't go that far back on a 1 minute on Omega charts. But what you really have to be cautious of here is if this starts to bounce and the market gets wiggy and starts rolling over, you're watching the S&P 500. Remember, I've got my 4-pack, right? Where I've got 4 charts. I've got a 1, a 5, a 30, and a daily chart of the S&P. And I'm looking at that, and I see the 5 had been going up, and then it starts flattening off, and the 1 had gone up, and now it's kind of been doing this and starting to do that. The 30 is still going to show some bullishness, although the moving averages are right there, so it's kind of pulling back. The daily, not much is going to change. It's still an overall bearish pattern with a little bit of a pop intraday is all we're seeing there. And I start rolling over, it's time to go. This is not a hold on and wait and see what happens. Folks, if you bought an option, if you buy an option on this bounce here, and let's just say you bought the $135 call for $9. Okay, that's what it cost you when it bounced off of that level. And the stock moves up, and at this point, It's now worth 11. At this point, it's worth 14. And it starts getting crazy in the middle there. Right? And at this point, we start getting, some wigging around and it starts to roll over. As that rollover takes place, if the S&P is going down, starting to go down, and we're seeing the weakness in the VIX, and you see in your position it's starting to do that, your stock may be about where it was, and all of a sudden an option is going to be worth $10. Like, wait, what just happened? The market maker is sucking the premium out of the puts, of the calls, of the calls. They're dumping it into the puts. So increasing and inflating the value of the puts, deflating the value of the calls, and you're left holding the bag. If you see the weakness, it's time to get out. It's just time to go. There's no ifs, ands, or buts. So when I talk about the pattern to trade in volatility, trade the direction of the market. If you're holding overnight, only trade the overall direction of the S&P. Right now, S&P bearish, right? So only trade bearish overall, long-term, holding overnight. Intraday, if tomorrow morning, we open up and let's see. Pretend this is it is hollow, but it's a hollow candle. If that's what my candle looks like tomorrow, we open there. We may get a little bit of wick one way or another. I don't care. Right? But we open there, so we, in essence, we gap up. Right there. One sec, guys. We gap up right there. And we take off. Right? There's an opportunity to enter into a trade. Right? And I'll take the bullish trade. Why? Because I have a clear path up to here. And if I have moving averages in here, 100-point levels, recent swing highs and lows, anything, I'm not going to take the trade. Right? But can I take it? Yes. Am I setting up? Oh, I didn't want to do that. Am I setting up here that all we're doing now is running into resistance and it's going to fail? Yeah. But if the S&P is going up and my stock is going up, can I take an intraday trade? I sure can. As soon as the market stops climbing and starts doing this, get out. Get out. Alex, I don't know when you wrote that, but Alex wrote it, and that was one of my gold nuggets in last week's Pop Core training. Good. Deborah said, are you typically going back in and shorting, buying puts in that time, capturing the H pattern for? No. I am very much afraid of. I remember as a kid, my grandmother used to work at the church carnivals. They'd cash gambling for the adults, right, downstairs. I would get in because my grandmother worked there, and it was all volunteer for her. And she would let me play the over and under, right? So yeah, it was under 7, over 7, and then if it hit 7, it was a loss, right? That was the bust. That's how the house made their money, was 7s. And I would try to say, okay, it's 3 overs in a row, so I'll bet on under, right? And that's what it is. It's a bet. It's a gamble. And Deborah, for me, my account, I am not interested in the gamble part. So if I had my trade and it works, my psyche is telling me I'm chasing it, trying to be profitable on that one again. It's my machismo, right? Which is crap, right? For me, I don't need to be right. I want to be rich. I don't care if I'm right. I'll be wrong every day long as long as I can be rich. I'm good. It will not hurt my feelings one bit whatsoever. Jim said, on your daily VIX chart, why are your colors red, then green, then yellow? I would think stoplight, red, yellow, green. What's your thought process on this? So it is a reason, Jim, for it. The green, and I'm going to get rid of, that's not going to let me do it here. Let's do this. Let me move it forward here. Just so I can get rid of the recent highs we've had there. We need more time too. Yeah, so won't let me. Trying to get those candles off. So the green, Jim, is my normal zone between 18 and 28, 29, 18 and 28, 29, right in there, is a normal zone for VIX, for someone that is a buyer and a seller. So I want to see it in the green zone. I'll pay a little bit more when I buy calls and puts. I'll get a little bit more when I sell my calls or puts as open position, sell to open, covered calls, spreads, and the likes, right? Yellow is awesome if you are a buyer. You want that really low VIX. You got really low cost. Red is high, and red for concerning of, yeah, I don't even know if I want to buy options in that really high VIX because of how overpriced they are, big wide spreads, high vols on the options that could easily flip over on us. So green was the go zone for me. Yellow is the next best one. I still like it, but I can't get any selling premium in there. I'm both buyer and seller. Red is just high volatility. Does that answer it for you, Jim? Yep. Okay, good. So Deborah said, thanks. So you wait until it breaks the low to go back for the bearish trade. Yeah, I would wait for another bearish setup, Deborah. So depending on where it closed, if it closed near resistance, and I don't remember who we were just looking at. If anybody does and you want to tell me, I'll bring it back. But is it S&P? No, I don't know. Netflix? No, it wasn't Netflix. Whoever it was. If it closed near that resistance, I drew that hollow candle. If it ran and closed right up at the moving average there, and then rolled over the next day, now we've got a perfect bearish bias with a rank of 1. Yes, I'm all over that bearish, but I'm waiting for the next setup. Deborah, I never go into this saying, today, this is the trade I'm going to do. I have my candidates picked out. I have my switchback trades picked out, right? The switchbacks are awesome, right? I love the setups. But, and actually, if you haven't seen it, guys, I don't have a lot of time to explain it right now, so maybe another day. If you go over to tradinglikeaboss.com and go to Trade with Rob, if you're not a subscriber, you want to be, right? I just did a recording of what I'm calling a high volatility switchback trade. So the problem with switchbacks, with any trades, I pick a trade out for tomorrow and it gaps up, $20 today. Okay, tomorrow I'll trade the bullish on, and then tomorrow it gaps down $14, and we're all over the place. I've got an answer for the how to trade those gaps now. When you get those big gap aways, I have an answer for it. Inside the Trade with Rob members area, which is free. It's got to register for it. Inside the Trade with Rob members area is the video, the training on how to do that. Right? And I talked about this in the pop class the other night as well. So make sure to check that out. Trade with Rob is awesome. Yeah, I'm glad you like it, Alex. All right. Let me go ahead and last section, your stocks to review. What candidates you want me to take a look at, folks? This is you. This is not me. I got 7 minutes left. I'll look at as many as I can find, as you'll give me in that 7-minute period. But it's up to you, meaning it's you to tell me what ones you want me to look at. These are not where I throw candidates in. I've given you a lot of trades already, a lot of candidates. All right, there we go. They're rolling in now. SPY, looks just like SPX. So Brenda, I like the setup. I like where it is now. We got the big gap down. Trade was gone, right? This is the perfect example of a high volatility switchback trade. This was a switchback on Thursday. Last trading day was Thursday. This was a switchback and it gapped away. Darn. Yeah, my setup could have potentially worked here today, right? So check that video out for that. So right now, Brenda, I want to see, in an ideal world, we close, here is fine, I don't care, but a move back up towards 518 and a fail back down to 504. Right? I mean, we're down 15 points already today. We move 17 points a day, so we're there. We're there. And then FCX. Any last candidates, drop them in, folks. Let's go look at more time because it's not one I normally trade. And the rain came down. Yowza. Ugly. All right, so I'm going to put a fib in here. Um, 35.5, 37.5. It's not as much as I'd like to see, but it's the candidate we have. I don't know what this line is here, so I don't want to just delete it. I want to go back and look. There's a lot. I mean, it's not It's not a fib line, but that level is important. If it overlaps with the fib, I'm going to keep it. If it doesn't, I'm going to get rid of it. So it's really not. So I'm going to get rid of it for now. Right? But keeping in mind that 33-point level, that was a resistance. Stock has rolled up, broke to the 382, failed with a confluence of the 8 moving average there off of that point. So I'm looking at this now, and it's a little late, but I'd really like to see this come back and retest the 33.5 and fail, and 31.5 is support. 32 is probably the target on it. Lower price company. So kind of tough. Hope that helps, Brenda. IWM was Andres. My interest has waned on IWM. That's for sure. Excuse me. All right, let's pull this back. Fibonacci. All right. So we got a false H pattern coming off of that 382 there, Andres. Yeah. I need to move back up to 186 for the drop back down to 180. It's already moved too much for us today. It's $4.50 today. I don't know what the fib it is. So, all right, I hope that helps. And then we got one more in there, which is FedEx. Oh boy. Yuck. All right, let's redraw the fib. All right, I mean, good fib. So, all right, this goes back to the obstacle course, Alex, right? Where's the obstacle? The 100-point level. We came down to it, we bounced. We come down again, we bounce. We're back there again today. We're going to bounce. I don't know. I'm not sure. But I'd have to look at this and say, is it worth it for me to take a trade off the 206 with 200 of support? So I'd be in this trade at 205 and a quarter. I'd be out of 201. So I've got about a $4 move. Yeah, about a $4, 4.25 move on this position. So overall, it's okay. I like FedEx as a company, always have. I think they're a good trading vehicle. I think they're a well-run business. How about that? I think UPS is as well. They're just slicker on how they pay their people and how they don't put them to full time, but that's a whole nother story. So I'd be okay up to 206 quarter, but we got to move back up. If it breaks the 100, I'm doing nothing until it breaks the 194. Debit spreads, Alex, are not my topic. They're not my thing. You said it right in your post here. Amelia uses them, right? If we can get Amelia to come in and teach them one day, that'd be great. But it's not something that I teach, that I trade. So I just find so much more value in credit than I do in debit. Amelia has a very unique system on how she trades, whether she chooses credit or debit and the likes, right? She's got a great little setup the way she does it. So, but we'll keep it in mind. My guys, my team, any recommendation like this already gets documented. I don't even have to do anything. They already document it and put it down as a potential topic. So we've got it on our list. So much appreciated. All right, everybody. Hey, listen, make sure you get your butts over to tradinglikeaboss.com. Right? If you haven't already done so, download the AI trading prompts. These are ones that I've created personally, used personally on a regular basis. It's free. Tells you what the best trading platform is to use, the AI platform to use, rather. The best AI platform to use, how to put the prompts in. We tell you where the variables are. Like you say, give me the earnings coming up for, prompt. It's Netflix, right? You put in Netflix. But it tells you all the prompts, the details, the reasons behind it. It's a great document that my team put together. I wrote the prompts. They did all the rest of the work putting this together. Andrew dropped the link in there, but go check it out. All of our free tools are listed up here. We're getting ready to blow this thing up and double and triple the size of what we've got here. So, all right, everybody, have a great rest of your day. Appreciate y'all. Great questions, great class, I think. Have a good one, and I'll see you on the next update. Bye for now.